Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is the 22nd of February. It's Thursday. The market's closed. S&P 500. The spiders lost 10 cents today, down 0.07%. And it got a little choppy in there today. It's actually been choppy in there the last couple days. So I think that means that as far as the S&P 500 goes, we've probably got to be a little bit more cautious in here right now for a while until we figure out what this volatility means. I don't like to see the market break out to a new high like this and then fail. I was expecting that this afternoon's move would be another push lower, but instead the buyers came back in, so that's somewhat encouraging. But we are range bound in here for the short term, and the obvious level of support continues to be down near this level, which is about 145.30, 145. Maybe we could push it down to 120, 145.25 or so. That's the important level of support. I think breaking below that, then we've got to be a little bit more cautious and think that maybe we're going to get a test of 44.50 or so. We do have all these moving averages that have been crisscrossing. The 5-day moving average is flattened out, so pretty much trendless in here, and you can see that for the last couple of weeks. We've had a couple failed breakout attempts, so it's just getting a little choppy in the S&P 500. It's definitely too early to call it any type of topping action. Anytime you have indecision in a market, it's more likely to continue in the direction of the original trend. But looking at the daily trend here, obviously this market is getting very extended, and that just increases the likelihood that we might get a more meaningful pullback at some point. So basically, I have no clue what this market's going to do. In looking at the 10-minute time frame, it's not giving us really any evidence or direction here, so it means just be cautious and wait for the trend to reveal itself to us, and then we can take advantage from there. The Nasdaq continues to outperform, and that's been kind of the what we've been looking for here. I said that over the weekend, that it looked like the Nasdaq was ready to catch up on a relative strength basis to the S&P 500, and that's what we're having happen here. The the Nasdaq 100 rather, did close at a new high here on the weekly time frame. You can see they're going back multiple years here. We've got what are we looking at? 1, 2, 3, 4. At least a 5-year high, I guess, back till back in the 2001 area. So the path of least resistance is higher in here. As I pointed out the weekend, we've got the 10, 20, and 50-day moving average all heading higher, with the 10 above the 20 above the 50. And this is a good example of why, again, we always give the benefit of the doubt to the buyers as long as the 50-day moving average remains higher, and that these pauses in an uptrend will typically be resolved in the direction of the original trend, which of course is higher in here. So we've got a record closing high for the last few years, and we have taken out these highs here. So remains bullish. No reason to think that it's going to pull back at any time. But of course you want to keep your stops in place just in case. We've got the best level of support probably down near 44.80 right now, and then just above that probably about 45 bucks a share. And if you really wanted to look at the short-term stuff right in here, but we've got a great uptrend. No reason to fight it. If you are, you're getting what you deserve, which is losses. And I say that as a trend follower. That's why I say that with confidence. Just like if you're trading the mid caps on the short side, it just obviously it hasn't paid to play the short side pretty much at any time except for a couple months in here over the last 5 years. These mid caps just keep going and going and going, and that's what we're seeing here is just a continued strength here, and it gets more extended, but that doesn't mean it's going to pull back. We're up, what are we, about 6 or 7 days in a row here in these mid caps, and it's not showing any signs of letting up. So don't think that the market is up too much if you're trying to short it. Don't look at your, throw away all your oscillators and indicators and focus on price, because that's the only thing that pays you here. As long as we have these higher lows, then you're safe. Now we do have a lower high here. Let's see if 157.50 is broken. If that gets broken, then maybe we're going to start to turn sideways first. But breaking an uptrend doesn't mean we're going to go down. It means that maybe we're due to consolidate these gains through a little bit more time. And of course, we've got this rising 5-day moving average. Don't fight that either. So the one really area of strength that was surprising today is the semiconductors. These stocks were up 2.6%. I think I saw a headline. I didn't really look at it too much. I'm not a news reporter, but I think it was analog devices maybe. I don't know. My internet was down most of the day. So we've got it right up against these this level here that's been this range, the upper level of the range that we've been observing the last few months as it's chopping around in here. But you look under the surface, look at this. We've got the 50-day moving average starting to advance. We've got the 10-day moving average being dragged higher and the 20-day moving average. So maybe we're getting ready to turn around in here. You could say, well, maybe it broke this little triangle, flag, whatever the heck you want to call it, doesn't matter. The point is, though, we do have on the weekly time frame a higher high right in here now after today's move. So perhaps the buyers are gaining control. To really get conviction, I think we need to see it above this level here at about 35.80. Although if that happens tomorrow, the market will be a little bit too extended probably to be buying it up there. But I think we have to start paying a little bit more attention to the strength in these semiconductors and thinking that we could be in for a Nasdaq that's led by the semiconductors, which is the classic, way that you want the market to be led higher. Is that typically it's the semiconductors because they lead the rest of technology, and Nasdaq is comprised mainly of technology. But you can see the importance of this 35.80 area where we've had that resistance late last year, and then again in here, and maybe it's going to be again. Don't look at that as resistance and say I'm going to sell short. It's a potential area of resistance. It's definitely a level of importance. It's been good support back in here, and now it's been resistance many times. But the more times resistance is tested, the more likely it is that the source of supply is being absorbed by the market and that it can push higher from here. And if that were to happen, I think we would see a pretty good short squeeze rally in the semiconductors because there's been a lot of negativity in that group. So we're going to start paying a lot more attention to these things. Over the last couple of weeks, couple of months actually, I've not even updated them many times because it's just been dead money. But it looks like the semiconductors might be awakening from their long, deep coma here. Let's look at the stocks that we had mentioned yesterday because we didn't have any open positions. First of all, we've got this dollar financial. We wanted to buy that above 29.50. That occurred early on, and then kind of failed really quickly right in here. But it didn't hit our stop. Our stop was $29.10. So it's still alive. But then we had another failed rally attempt, and it came down with big volume. So I'd say just because of the big volume that it came down on in here, be very aggressive with your stop. I'd say that right now maybe 29.20, but that would still give us a 30-cent loss. It would, so we'll raise our stop by a dime, but I really don't like the way this thing keeps failing like this. Maybe it's going to go, but it's kind of iffy in here. I told you I hate gold stocks, or I'm not very good at trading gold stocks, and true to its form, this Northgate proved me right in that. The stock didn't break out here. My suggestion was to buy this stock above $3.85. That occurred early on right in here, and our stop was going to be at 374. I don't know why I mentioned this stock. I don't like gold stocks. I never make money with them. That was proven once again. So if I mention a gold stock again in the future, just fast forward the video or ignore me because I'm just no good at them. SiRF Technology, SiRF, we wanted to buy this one above 31.15. We got that chance early on, and the stock really rallied nicely. It came in very sharp. It came down, not to our stop though. Our stop was 30.82. So if you're still in this stock, it's tough for me to hold them after such a severe pullback like that. But if you're still in the stock, I'd say, why don't you put your stop right here at about 31.08 in SiRF.